Hey everybody, great to be back here with you today. Mike Fairborn here for Markets and Sectors. Looking at look at the markets today and just seeing where they're at. We know that the markets have pulled back a little bit, testing some long-term potential support levels and maybe another bit of a bounce today. So we want to take a look and see what we're getting in terms of market potential. Is there potential there for a bounce to the upside? What are the indicators showing us as we look across markets in general? In addition, what I want to start doing within this class is I want to start taking a look at stocks, basically taking some paper trades each week, some example trades with the strongest stocks in the strongest sectors, and really just kind of building up in that top-down analysis. And so looking forward to diving into that with you. All right, well, welcome to all of you, and joining the chat by good friend, colleague of mine, Brent Morse. Thank you, Brent, for helping out today. Folks, good to be with you. We do have Mr. Robert Boucher here. Chris B, we've got Kenneth, Ray, see Ray here as well as Andrew. How are you doing, Joe? Mighty Mouse, Riceberg, Jay Richardson, and Rome. So welcome to all of you. All right, well, I look forward to diving into this. And finally, we've got Scott there. Folks, if you are new to our discussion here today, by the way, yeah, we do take a look in this class at markets and sectors, their performance collectively and comparatively speaking. We look at those amongst a number of different indicators, including volume indications as well. And then also we will, like I said, we will be looking at example trades in this class going forward too, based on top-down analysis specifically, trying to find the strongest stocks within the strongest sectors based on market conditions. So with that, good to be here with you. Let's dive on into our disclosures here to get going. Information here is for general information purposes only. Now, Schwab does not recommend the use of technical analysis as a sole means of investment research. Paper money software application is for education purposes only. Investing involves risk, including, for some products, more than your initial investment. We do take a look at futures and futures options from time to time, mainly just futures, I should say. We just look at the charts of futures, but I did want to state the futures and futures options trading does involve substantial risk, is not suitable for all investors. Final slide here, just wanting to state that past performance is no guarantee of future results as well. Just a quick note too, if we do look at any dividend paying stocks, I just want to let everybody know that dividend stocks, they can, or dividend paying companies, they can cut dividends at any time as well, because some of those we want to take a look at today, perhaps. All right, so with that, let's get sharing, let's get going. And what I wanted to start off today with, in fact, let's go full screen here. We'll start off with our SPX, but even before I get going there, yes, I did want to start us off today with a poll that I'll keep just going in the background for a little bit here. We'll let it roll, and then we'll kind of go into it a little bit. But curious how this group is. I know you guys, more than other groups, very likely here that, especially for the classes that I teach, are probably not too much involved in maybe sector switches. What sectors are going to be showing more strength relative to weakness? What about big, broad categories of investments like growth stocks, value stocks, income stocks? I had a question I want to throw out in the poll right now. And I'm going to type that in. I did a similar poll. I'm just curious what the results are so we can kind of compare these in a second. But I'll give it a couple minutes here, and that poll should show up. But I'm not sure, Brent, if we can can we link that one to the top, the polls? I'm not sure if they do that, but perhaps we can if they work. Let's see. Mine just shows value at the top, so I don't know if that's working. I'm not seeing it. Did that show up? It should show in the poll. I'm not getting it on my end right now, but maybe you guys are getting everything. It might be a little bit different from my end. Just a quick question, will value stocks beat growth stocks in 2025 or not? That was the question. All right. So having said that, we'll see how the poll numbers turn out there, and we'll take a look at the markets. And so initially with our markets here, the markets generally speaking, we'll look at the S&P 500 first. Now, you can see that we did have a pretty big pullback. Obviously, we had this earlier this week, and everybody's well aware of that. But just to kind of highlight a couple of different details with it, we did make a new low. Now, this was a high up top, but we didn't ultimately make a lower low right here. On a bit of a shorter term, getting maybe into an intermediate term basis. Actually, right now, if you guys, this is really interesting because sometimes these can unfold. But this would be what's referred to as an expanding triangle if it continues to do this. And so in other words, we're used to seeing a lot of contracting triangles where you're getting lower highs and higher lows, kind of coils up till you reach the vertex of the triangle and you get a move up or a move down, generally speaking. Sometimes it can still go flat for a while, but a expanding triangle is a little bit different. It keeps expanding. So you're getting higher highs and lower lows. And this does happen from time to time. And you kind of watch these very closely and see what you get. But you might get, basically what you're getting is just higher moves off of each level, which can be bigger moves. And in fact, if that were to unfold here, we would get perhaps a higher high if in fact, it is an expanding triangle. Regardless though, this is happening in a really interesting place. You might agree with me, some of you. There is some indications of support right through here, prior lows. Now, I had drawn through this existing trend line coming through here. A lot of times I like to carry those trend lines on because they can act as additional and interesting, actually, support points. Case in point right here. Notice how close we got to this level right there. We bounced right off that level. We bounced off it again, and now it could be acting. It was up top here. Look at this. This is interesting. It kind of acts as resistance through here. I'll draw an R right there. And now it kind of acts as support through here. And now we're back to support. You get below it. Now it's resistance, question mark. And now we're maybe support. So this could be a positive getting back up above that existing trend line that covers this entire range of our channel here on really going back actually to December of last year is where we've drawn that from. So that's interesting, right, as we set that up. Now, many of you I think know this, but I'm going to go ahead and throw it out right now. So you can see this a little bit bigger, but a 200-day moving average, obviously a very popular moving average, comes in and hits right off that level. So another sort of interesting indication that we could be seeing right there. Now, when you guys look at this, what might the next steps be? What might the next steps be? Maybe, hey, where is it going to go next? Where might we go next? And that could be, it's an important level at the 200. In fact, we had not broken below that 200-day moving average and since over here. So this was October, and back up above it, I guess November of 23. So a little while ago, right? A little while ago was the last time we got below here. And we bounced off it the first time. This is back in October. And then, of course, we bounced above it, and we went on a very, very long trend. So keep that in mind. A couple of points. We've got shorter-term support in here, breaking back up above our trend line. And that's what we've got. Now, I am going to end the poll real quick. And I didn't want to keep that going on too long, but there are the poll results right there. We got 39 votes. Appreciate you guys. It's almost a toss-up here. We do have, so growth leading value, and I could totally get that because really growth has been such a strong driver. And right now, short term, if we look at it, what we're getting at here is we might see kind of a swing trade type bounce. When I say swing trade, I'm looking at really 3 to 10 days or so to the upside. In other words, we've been doing this for a little bit. You can see the size of the move up, the size of the move down. If it does bounce, if it does, and that's the question mark, it could be due. It could be due for another rally up, and maybe some traders be looking at that swing trade time frame, which could put growth, at least in a short-term basis, right back up, moving higher again, perhaps. It's a really interesting question to see what we'll get on growth here. I did do, and I just want to kind of give you guys a comparison. This was the tweet that I'd sent out. I'm going to move this over. Let's see. Can I move this over here? Okay. Can I do that? There it goes. Okay. So you got to see the numbers at least. Okay. So there are the numbers right there. And that's what I got here with 36 votes. So it's pretty comparable on the number of votes, 39 to 36. Value was at 61% growth. So value in this case beat it substantially, right? Beat the number substantially here relative to what we saw in the polls here. But you guys are about tossed up. So it's really interesting. I just want to compare those two. They say that a lot of times to get a statistical number that you're looking at, it's at least 30, which is great because we got 36 and 39 to look at a population. So they say oftentimes it's around 30, but there you go. There's the variance right there, kind of on Twitter, or X, I should say, as well as what you guys had. So interesting. I wanted to look today at maybe a value as well as potentially a growth for a paper trade on both sides today. We'll see how they do pan out. One last thing before we look at this, what might we're just going to throw this out to everybody based on what we've talked about in the past, what might we look for here in terms of a little bit more of technical confirmation of the possibility of a bounce so that we can have eyes on it, later this week and into next week if we are getting signs of a bounce? What would you guys say might be the next thing? Because we are seeing some a breakthrough resistance here. There's more time left in the day. We don't know if we're going to close above here. It looks like we might, but we don't know yet. But there could be a line that we could draw right through here and say, well, that was the high of the low day. And so the next step could be a hold, right? A close above the high. Thank you, Kenneth. Thank you, Ray. You guys got it. I'm sorry, there was a little bit of delay in the chat, so I couldn't see it in time, but you got it. A hold right there. The Homer rule, Jay Richardson, absolutely. And I kind of have my variation of the Homer rule. It's a fractal, which is interesting that Kevin has chosen something like that. I want to talk about both. But if we can close above the high of the low day, we still have almost 15 minutes left in the trading day to day. That could be another positive. Because look at this. Have we done that yet over here? We have not. This whole time, we have not closed above the high of the low day. And some traders will look at that for an indication on the market. S&P 500. The S&P 500. Okay. Can we break above? Can we go above that level? That's interesting. The fractal. I've talked about this in my ThinkScript class as well as the swing trading class, but that's this. A low, you get two higher lows, then this is your middle fractal bar, and then you get two higher lows. It's looking at lows. So if we get another low over here, it doesn't even have to be a hold necessarily, but if you can get a higher low over here, wherever it's at, higher, just as long as it's higher than this low, that would be referred to as a fractal bottom. And that can also start. And by the way, fractals, whatever the case might be, fractals, holds, they are just happening maybe at interesting areas. Trendline break, 200-day moving average pop. You're getting a strong candle. This was actually a hammer yesterday for the most part, but then also support break above, breaking above resistance, maybe holding support there. All right, so just a few things I wanted to take a look at today. All right, keep us apprised, because I think it's important as we look at this, is we just say, well, it's showing support, but then what's next? What do we want to look at next? We want to combine that together so we have kind of a perspective to take going forward for you guys, each week. Okay, let's do this. We got to take a look at a couple of other things too. Now, I wanted to look at volume specifically, and to do that, we don't get volume on the SPX. We don't have volume. It's an index, right? People aren't buying the index. But here is the ES as the futures contract, just to kind of highlight a couple of details over here. I wanted to show you something here that is interesting, and I want to tie this in with an indicator that's been showing us a few things that we haven't seen for a while. We want to keep eyes on it, okay? On the ES itself, we did take out that level, but we might have bounced back up above it, and we're seeing if we can, we've been in a sideways channel, kind of a bit of a box trade through here. Will we get a move to the upside from here? It's a question, right? What is volume showing us? If I take a look at the money flow, which compares and it tries to net out buyers versus sellers, look at these lines over here. Let me just show you a comparison of some divergence lines to keep an eye on. Look at this line through there. That was a low. Obviously, it's a key low in price right there. If I take a look at this low, down below, trying to draw it highlighted. There you go. So this low right here, notice that we did take out prices, but we came back up above it. We actually slammed through that really well. We haven't got back anywhere above that right now. So this is a sign that there were some, relative to buyers, we really saw some pretty strong weakness coming in here. In fact, you can see the strength right there. Look at this. Look at the volume. Creeping up. Some pretty good volume there. And on the recovery thus far, it's been quite weak, but collectively, this volume relative to selling volume has pushed the money flow line a little bit weaker than price action. So we want to keep tabs on that. That could be something of interest to keep an eye on. Oh, you know what? There's one more indicator I want to show you that kind of combines with the 200-day moving average in here, and that is our linear regression channel. Let's pull it up right now. I thought I had it there. I didn't. Linear regression. So let's talk about linear regression. I'm going to put it on here while you can see it on the chart. Notice that we're getting these red lines showing up. What's going on here? The linear regression fits basically a straight line to a scatter plot of data. This is your scatter plot of data that we're seeing over here. Okay. Now it calculates the slope, sort of the mean of this data, and then it minimizes the distance between the line and the data points to predict trends and relationships. You'll notice that we have the lower linear regression channel touched off right there. We also have it touching, you got it, right where the 200-day moving average is. So bouncing off this level, some traders that utilize the linear regression channel, they look for prices to come back up to the mean, referred to as a reversion to the mean. Now, if it breaks above that top, then it might trend to the upper line or somewhere, actually, somewhere. That's horrible. I can't draw it that long, but you can see there's a midpoint. Oh, geez, let's just do this. Let's go over here and actually draw a straight line. So here we go. This is the mid-range between the upper linear regression and actually the reversion or the mean itself. And look at this. Notice over here, if I put a line roughly in the middle, where has the tendency been on the longer term trend, folks? On the longer term trend, the tendency has been once we get up above the mean, we might trend to this level. So keeping an eye on this could be helpful. It could be helpful. We actually have a linear regression 50 that actually gives you that middle line. Let me give it to you right here. Go back into our dropper icon. We type in linear regression right there. There's your 50 channel. And that actually gives you the mid ranges as well between the 2 points. So keep that in mind. Some interesting points coming up. But yeah, I mean, this is the last time in the last year's worth of data that we actually came to that level. We had a pretty good bounce last time. Now, when we did bounce, we came up to the mean, and then we went about the 50% down here before we got back up above the mean, before we hit it to the upside. So it can be a long path. We just right now are just seeing if it can bounce above that level when we looked at maybe some Caholds or fractals to give us the next signal that it might bounce. All right. Any questions on that? Brent's doing a fantastic job in the chat, but I just want to take a look and see if there's anything I could show you guys visually here as well. By the way, if you get a chance, if you like today's presentation, you got to like it first. But if you appreciate, if there's something you'd find useful, I'd appreciate if you hit the like button. It gives me really good understanding that this kind of material is useful, helpful for you guys, and would love to see that. By the way, bottom right-hand corner of the screen, really easy to do. Just click on the subscribe button as well. All right. I think we're all caught up. All right. Very good. Let's do this. I'm going to scoot on over now, and I want to go right into this area here because I just want to, well, let's do this. I wanted to show, first of all, markets first. Let's go through ahead and look at the other markets. There was a lot to do just on the S&P 500, but there is some correlation here with the NASDAQ itself. Speaking of maybe more growth type related stocks, you can see that up top here. 200-day moving average. We actually hit that right over here in August and did a nice bounce off that level after a pretty decent pullback. Okay. And what did we do? We got very close to that level. We got a bit of a doji yesterday. There's your 200. Very close to a Cahold. It's not a Cahold yet, so I can't say it closed above the high to low day, but it would be the first one that we've seen in this entire pullback from the highs right up here. So another area to keep an eye on. I want to go through everything here because we do look at markets, the 4 key market indices here. So let's do this. So $ DJI, it's got that funny symbol. This one has the $ in front of it, folks. So if you're ever looking at the Dow Jones, $ DJI. All right, a little bit further away from our 200-day moving average. And I would say this has done a really good job. I would just say a better job of holding into what's kind of like a box trade, a clearer range. I don't know if it will hold in that box range, but we've got a 200-day moving average right at that box. Look at this over here. Wow. Wow, that's pretty interesting. So we had a nice run up, and then what do? We went into a box, and a lot of traders will say, they're kind of bearish. I should say bullish above here, or even a bounce off the bottom, okay? Or possibly bearish if prices go down. Now, on that topic, we have seen a flash from an indication that we haven't seen in quite a while, actually. And that is, we'll just jump into this, and then I'm gonna show you sectors here in a second. But if I scoot on over, we'll hit this in a moment. But here is our 5-year weekly looking at the Hindenburg Omen. Folks, we're getting a ton of spikes over here on the Omen itself. You can see that the last time we got this many spikes, we did get a downward move, but it was clearly accompanied by the trend. In other words, we had a long-term breakdown right there. Guess what we just had? We actually broke below the low right there that we haven't done in a while. But it's not really a trend change yet. That was actually noted for a lower high right there. LH, lower high. That's hard to see. I'll zoom in. Okay, right there. So this was the breakdown that we saw back in 22. We broke below our lows. And then we had, in fact, a lower high right there. Okay? A lower high, that was a lower low. When you got the lower high and now you get a new lower low right there, that is when we got a trend change to the downside, That's what we got, a trend change to the downside. And that's what this Omen, where I think it really shines, is it gives us, hey, be mindful, right over here, be mindful of the trend. Keep an eye on the trend. But if you start to break down, you can get that. Remember, once again, the Hindenburg Omen, what it does is it's an actual, so the read here in terms of the data, measures 52-week new highs relative to 52-week new lows. And if there's a chasm, a large range between those two, in other words, if you're getting a fair number of lows and a fair number of highs, you might get a break in the market. And that is a really interesting indication, because that would be, I mean, if you're long the market, that would be a nice one to be aware of, because we know what it's like if the market is dropping and you're long the market. A lot of times, yeah, your individual stocks might go down with them, and just something to be mindful of. A lot of sectors can go down too over that time frame. So keep that in mind. We got that. All right. Now, I wanted to actually do a couple of things here too. Sorry, I want to do a quick detour because I thought it fell in line pretty good with what we were discussing there. That is, again, a weekly chart, and we did make a weekly low, real short term, but we might bounce up above it, and that's not unusual if you're in a sideways channel. So we should have some pretty good eyes on this right now for the next few weeks, and we'll certainly do that in this class here. Okay, take a look at sectors. Now, the sectors that seem to be showing more strength, let's just go through several of these. That would be down. Financials has been kind of up, but then we just saw the break. We just broke through the low end of the range. It's normally something you don't want to see. Utilities kind of flat into a sideways channel. Real estate's been strong. Consumer staples strong. Healthcare. And then finally, materials has been doing okay too. Kind of flat, but maybe a little bit of a movement more recently, specifically today here. Okay. With that, I want to look today at staples, and I want to look at healthcare. So we'll go through that in a second, but I wanted to highlight this because sometimes if you get, the market showing strength and then specifically other sectors showing strength, we can look at those, because to get a whole sector to go higher, a lot of times there can be fundamentals that are tied into it. To get a whole sector going up, there can be some fundamental drivers, and fundamental drivers can mean longer term trends taking place. Infotech, down. Communication services, down. Now, they could bounce. And we might be seeing, like we saw in the markets, maybe some of these lows coming in here, or the possibility of a bounce here. That's the question. But we could certainly see that from some of our other indications, but there's also the possibility of some downside weakness as well. Okay, so with that, now we're going to go back to the beginning of our kind of sector market review. I should say the first kind of set of charts here, and then we'll go from there. Let's see. Riceberg says, no sector which is really breaking out strong. Right, so the only one really that kind of looks like a bull flag, Riceberg, to your point, because I agree with you collectively, we saw a new high in the staples, but it was coming off a new low. Healthcare, if I right click on it, maximize the sell, Can you see the possibility of a flag pattern happening over here? We had a long-term trend line break over here. Okay, so we made this high and we actually broke above this high right there. So it was a high, you got a high, and then you got a higher low over here as well. And then you got another higher high. So the trend technically, this is a trend change. Technically, it is a trend change. You're getting from a downward move, okay, you're getting a higher high and a higher low, but the higher low, we only know it's a higher low when we make another high. So we are getting this general formation in here, which is our trend. And this might be showing a new upward trend. This is also noted in the healthcare sector, a defensive type sector, very similar to consumer staples, which is actually also a defensive sector, which brought to mind the poll. And that's why I did this earlier in the week as well with that poll, just to see what does happen. But we can watch this very close and see, it might consolidate a little bit here, but if it starts to break out again, it could be interesting. But I think, you're onto something there, Riceberg. We'll see what happens with the other stocks out there in the S&P 500 if we bounce off that support or if we just kind of struggle a little bit, making a moderate new high in the markets. Okay, so taking a look at a few details here, I would say that McClellan is coming in at a very good time if it does unfold. McClellan oscillator over here on the NYSE. Remember a read below minus 100? And if you get back up above a minus 70, and did we do that? That gives us a 2 to 3 week rally. Let's see, if I point to it right here, we are at a minus 71. We're very, very close to a 70. If we get a little bit of strength at the close today, or even a little bit of a follow through tomorrow, right? Kind of like that fractal we discussed, then we could see the possibility of, the McClellan, and that gives us a 2 to 3 week. Fits right into the swing trade time frame. 10 days is 2 weeks. So will we get that bounce? McClellan is suggesting we could be close. In terms of advancers and decliners, holding up incredibly well. We made a new low in prices up top, but the advanced decliners, based upon the same low level, again, coming back to our divergences, measuring that low, look where we're at. We hit that low, but we're actually above that low. So that just tells us that there are still some advancers in the market. That plays into an upside move. Whether we get it or not, it kind of lines up with more of an upside bounce. The advancers decliners do. So let's go ahead and hit some more in here. That's the SPX EW. Didn't really hold the flag pattern. It did begin to break down, but again, there is support through here, and collectively we might get a bigger market bounce. Okay, back to our Omen. We already looked at this one, so we're good there. I will say that the McClellan Summation Index on a weekly basis, again, NYSE, coming down, 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 which we would expect because we have been down for the past several weeks. More bullish if we can see it flip, and what will flip first is the oscillator itself. So we're actually just barely starting to maybe flatten out a little bit. We shall see. I think the big thing here to keep an eye on is that we are getting a fair number of 52-week new lows. And if we start to see the trend tie into that, we need to be very, very careful. All right. Okay, we did not get a bounce when we did make a new high in the NYSE. We didn't make a new high, but we came back to similar highs. So we didn't quite get a new high, but just the number of 50 of new highs in the NYSE, we stayed low. And generally we said for the trend to stay up, and what we've been seeing is we had been clearing using 250 as a guide every time we made a higher high in the market. Right? We were always clearing with these spikes over here above 250. Look at this. All the way through here, except at this point. Now, the key thing is we actually didn't make a new high here. We came dang close. So we can't really say that, this doesn't work. I mean, if we would have had a new high, we came very, very close. So we have to be careful with this because, this kind of plays a little bit into the Hindenburg a little bit. we're not getting as many highs, we're getting a larger number of lows, which covers exactly this time frame over here. So as we weren't getting highs, it turns out we were getting lows in the market. Okay, so keep that 52-week new lows. So that's kind of like, man, what's going to happen over here? Are we going to see it break or not? We can certainly have eyes on it. I want to go back one. Actually, you know what? No, I'm going to have to show you the NY. Let's just do this. I'm going to flip this over to the NYA, the NYSE, so you can see that level. In fact, I did put an alert on here for us. We were looking at it last time. Notice we didn't get up to that level, so that's not a new high. So that correlation with new highs in the market, it was only when, all-time 52-week new highs, only when the markets were making new highs too. We didn't get that, but still at the same time, in terms of possible weakness, what we could see here is that is actually a lower high, right? So it is technically a lower high. If we were to come down here and make a lower low, then we have a change in the trend. And that's where we got to be very, very careful about that Hindenburg. And maybe some of you, that are looking at this indicator, I say very careful because, you're getting some really big signs in terms of 52-week new lows. Now, that might translate into keeping a closer watch on your trades that are in terms of your long trades. So, but we're not there yet. And, if we break into a new high here, it could be very interesting. Now, let's get into our scenario here for seasonality. Okay, so seasonality is actually playing. This is actually outside of seasonality if we take out the COVID scenario. But it's funny because it's lining up perfectly with kind of the COVID scenario that we saw back in this time frame, where we had a weaker March, and we'll see if we get a rally back here in April and what happens over the remainder of the year. It's actually really quite strong in here. There is some concern out there in terms of tariffs, and we'll see how that plays out. But one thing you could say with President Trump is there's not, if you look and see at his policies, it doesn't always, it's not on the surface. In other words, it might be part of a bigger negotiation. So I always say, give it a month or two if you're looking at it in terms of the markets, because tariffs on, tariffs off. I don't know how long that's going to last, but it doesn't mean just because they're on right now, they're going to be on indefinitely or for an extended period of time. I had heard that there's a lot of discussion about tariffs right now, and that's been going on for quite some time, for the last few weeks. Evidently, they didn't reach an agreement. There are tariffs currently, but if that were to be taken off, maybe seasonality looks more in line for the remainder of the year. That's what I'm getting at there with the tariffs. And if not, maybe there's the downsides. I don't know. It's going to be interesting. There were some notes from the Atlanta Fed saying that they anticipate, and I sent a post out on X on this, basically just stating that they were expecting weaker economic conditions in the future for this year. I think it was down 2.98%. I don't have, yeah. You can take a look at it. I have it posted here. Let me just post this. I can post this in for you, and you can take a look at it if you are, in fact, interested. Okay. Oh, yeah, so that's the X. And by the way, thanks for catching that. Yeah, for back here, let me just go ahead and post this. So for that Hindenburg omen right here, let's go ahead and get that so you guys have this script for it. And I'm just going to share this right now into the chat. Keep in mind that those scripts aren't guaranteed for timeliness or accuracy. As long as the data is good coming into the platform, you would be able to get that data. I should say the script should work out fine, correctly, but yeah, just wanted to make that note. So there's the Hindenburg right there. All right, you got it. Now, for anybody that's viewing this in the archives as a recording, let me do this. I'm going to go ahead and just post this so you can see that link right there. This is the Hindenburg. I'll type this up. And you just want to, copy this and put it into the setup up top. So there it is right there. Just wanted to highlight it. I just barely put it in just now. Okay, so you would copy this, right? Actually, just this. You can copy the whole thing, but this last portion is the most important, obviously. Copy that, and you can go up into Setup right here and open that shared study, and you've got it right there. Preview it and just paste it in. Then you'll find it. Excuse me, you'll find it over here as an indicator. Okay. All right. So with that, let's go ahead and continue on discussion. And let's see, where were we? Okay, that's just a short-term basis. I love these because it just gives us more price data to take a look at here on our for the S&P 500 on a 30-minute chart. In other words, what does that long-term trend line look like? Touch, got above it here. Almost a little bit of a W type pattern. Will we get the W though coming up to the top? That's the question mark, but we'll see how that unfolds. But now you can see some of the details kind of lining up here. Oh, the seasonality chart. Sorry. I can show you how to get it over. Seasonality is right over here. Let's go back into this. Seasonality is built in. So you can go into style up top here. Scoot on over to chart mode. Seasonality, bam, right there. That's Verizon's. Okay. SPX. There you go. That's funny. Verizon was saved. That's a 5-year. By the way, one thing you can do on this, just click on the wheel to make it more comparable over time. Go to price axis and then show right there as a percentage. You see it right there. And that's the same one we had, Luke. Does that help? Okay, good. I think we're all set. Let me know if that works. What else I need to do? Okay. That's that. Now I'm going to reload it and we'll pull it back here. You got it, Luke. Hey, by the way, Kenneth just said, hey, bulls are fighting. Well, it looked like that on that 30-minute chart. I mean, we'll see if they can continue, but will they be able to bring it back up and get the hold in there? That's interesting. Got some eyes on it right now. Okay, so in our final segment, what I wanted to do is talk about a couple of different stocks that we can look at and put some paper trades in, for this class, and a couple, basically in those two sectors. We saw one for consumer staples and we saw one for healthcare. The healthcare one, let me show it to you right now. So in other words, remember what we saw in healthcare? We saw the healthcare looking a lot like, well, it looked a lot like this. It had come down, broken above a trend line, made some new highs over here, had a little bit of a bull flag, and was kind of just sitting over here for the possibility of some strength going forward. That was the entire sector. And we're building on that sector. And we say, if the sector is showing strength, well, then what about a company within healthcare? This is Baxter. And notice that Baxter looks somewhat similar. Baxter is actually getting a Cahold pattern today. If it doesn't have a Cahold right now because we're not closed yet. We still got 20 minutes or so. But notice over here, do you see the flag pattern coming up? Now we're building on the sector in a defensive sector as well. The sector's been strong. Do you see the pullback right there? Okay. Will it come up here and unfold this flag pattern? Now, I talked a lot about this, these swing trades in the swing trade class. So keep an eye on that. We might see, if this is kind of a flag pattern, you might see this, a move like this that comes up here. That's the full retracement of the flag that kind of puts you up towards the high. Will we get that or not? We don't know. But we're trying to find a strong sector in here that might be defensive and move with the general market. A bounce in the market as well. So seeing some strength. And by the way, bouncing kind of off the 10-period moving average right now. Doesn't it look like that? Just some eyes on it there a little bit. So that's one we can put a trade on. And what I'm going to do right now is I'm going to say maybe our exit level, a potential exit could be below the 34. And our realize it's a little ways down, but that's the pullback of this move. A lot of times we're maybe looking at the low of the move and putting a low exit below that low. Sometimes we can put it below today's low as well. I'm going to leave it kind of open to you guys. We do have different rules in the swing trade class that I do teach, and that's just something to keep in mind. There are swing trade. I was going to put that on another. I'm going to show you guys something. Okay, let's see here. Here is, well, let's do this. I'll put that trade in here. So some traders, I leave it kind of open. But for our class, we can either be looking at an exit below today's low or the low of the range, either of these two. Let's go ahead and put that on right now, and I'll put an alert in place. In fact, we can put it below today's low for now. It's more of a swing trade scenario here, about 34.70. Let's go up top into the trade. And by the way, as I talk about stops, stops are not guaranteed. By the way, they're not guaranteed an execution. Sometimes they, once triggered, they participate as in the market like other trades do, right? They're competitive. They're out there in the market and they try to get filled as well. That's what I'm getting at. And so we'll do it with the stop over here. We'll just do 100 shares. This stop in place, I'm going to put these both as a good tail. Cancel order over here. 34.70 was our number. So it's actually a fairly tight exit, but that's the trade right there. And I'll put it in place right there so you can see it. So in our paper money trade, buying 100 backs as a strong kind of a sector trade. We'll see if it unfolds as a bull trade, as a bull flag right now. There is the stop order right there. Boom. All right, so that is in, and we've got that in place. Another one we could look at, and there's the fill right there. Another one we could look at is CPB, Consumer Staples, Campbell's of all things. Campbell's. Look at this. Campbell's coming down here. It's just kind of more like a dividend trade. I mentioned earlier that dividend-paying stocks aren't guaranteed, to keep paying dividends, right? They can be cut or eliminated at any time. But it does have, I think, a yield on it of, well, almost 4%, 3.9 right now. It's a downward trend, so I would say there's risk to that for sure. What we'll do this instead. Let's wait and see if we can get, since it had earnings and it gapped down on earnings, let's see if it can close above maybe the high of the low bar down here too, or bounce off support. Okay. One thing I was looking at on Campbell's, and by the way, folks, this is kind of an interesting portion of Schwab.com. If you take a look at these, one thing I noticed on it is they are expecting their revenue numbers to increase again this year. Whether that happens or not, we don't know, but that's the projected number. This is for Campbell's. You can find this, there it is, Campbell's up top. You can find this just by going into research tools and then typing in CPB. All right, well, we'll keep eyes on that one. How about that? We're just about out of time anyways. Again, folks, on the stop orders, yeah, they're not guaranteed as a fill. In fact, they compete with other existing orders in the market once they are triggered. I want to make sure I got that clear, so that you guys understand that. But it is a stop in place, and that's really quite a tight stop. In other words, it's some people on these swing trades are anticipating a move up here or not. I should probably show you this because of the fact that we cover that in this class right here as a side note. This is the swing trade class. Those are some of the rules we're tapping into, but we might use those rules in this class as well. I'll throw this into the chat if you want to check that out. But that is just the playlist for it right there. All right, everybody. Hey, yeah, if you don't mind, smash that like button if you found this useful. It really helps me understand if you did like it. Subscribe, and I don't think we had a survey today. I want to thank Brent Moores, as always, does a fantastic job. Be sure and check out Brent's stuff as well. He does a great job. He teaches a managing an options portfolio. Really encourage you to take a look at that. I do chat for him on that class generally, like on Tuesdays. So he teaches some other great stuff as well. But on that note, guys, have a fantastic rest of the day. Look forward to future discussions with y'all. Take care.